Investment advisory services offered through Arca Investment Management, LLC, a registered investment advisor. The subject matter discussed here is provided for general information and educational purposes and is in no way intended as an investment advice, investment research, legal advice, tax advice, a research report, or a recommendation. Any decision to invest or take any other action with respect to any investments or strategies discussed in this series may involve risks not discussed, and therefore such decisions should not be based solely on the information presented. Please consult your own financial, legal, tax professional. This discussion is not a solicitation or an offer to sell securities or investment advisory services.
Welcome back to Connecting Nodes. Connecting Nodes is a new show that we are doing here, connecting the world of investors and builders, discussing what we are, as founders and investors, seeing as the future being formed today, where the innovation is going, and what potential new themes are forming right now in front of our eyes. For investors, what does the world of digital assets look like, not only in 1, 3, or 5 years, but more? We're really trying to be educational here and giving our points of views, pulling in a lot of observational data that we have access to as venture investors here, and we look forward to having a great chat with you all. Again, if you have any questions or if you want to reach out to us, feel free to do so. We love to talk to those that are building our future and those that are trying to invest in our future. What has happened this month, Michal?
Well, GM to you as well, David, and
GM.
to our dear listeners. Very excited to jump in as we have entered one of those periods in time that sometimes it is really hard to pick themes and topics that could be of interest to kind of broader audience that we're trying to address here. But one that immediately jumped out as I kind of scrolled through the news or what actually happened over the course of last 30 days is a topic that I don't think has really made much of headlines in the last few months, even years, but until quite recently, in the month of May, this year 2023, became very much a topic of discussion of the space, both from the founders, builders, as well as investors, unavoidably. So that topic really revolves in and around hardware. We often hear talk about essentially kind of the software and middleware build out on top of these wonderful public networks that we learn to love and admire and support and criticize and have all sorts of active discussion from all corners of this universe. But one that has jumped out of the front newspapers and ultimately of crypto Twitter as a topic of the day, and that is started and leading here with discussions in and around Ledger, the very popular hardware wallet that has come to the market and became really a golden standard for what a self-sovereign security solution should look like for all those of us that actually really put a price on privacy and sovereignty access to our own assets in a safe and secure manner that at the same time has quite a nice and relatively straightforward UI UX to boot. Now, that has all been called in question with many of, I would say, kind of the existential woes coming to forth when Ledger earlier this month announced a new upgrade, a firmware upgrade that essentially is aiming to offer a broader category of a user that perhaps is not as crypto and Web3 native, perhaps is not super familiar with setting up and storing their seed phrase, and a user that perhaps would like to use a third party to recover its seed phrase and the assets that the ledger would typically unlock. And that firmware update kind of snuck in there early in May. As soon as it got actually picked up by different media outlets, there was immediate wave of response, and perhaps an excellent example of how it takes truly years, sometimes decades, to build up to the reputation. And certainly Ledger has that name and brand and clout in the space. And it really takes one poorly executed announcement to undermine a lot of that trust.
And let's just talk a little bit just from the valuation side and from the venture perspective, obviously. Ledger recently raised around as of March of 23, so just a few months ago, and the post valuation of that was $1.4 billion. The company has raised to date, this is coming from PitchBook, over $570 million. And so this is a unicorn, and this is why this is important.
And beyond just being a unicorn, I think it has been very well regarded and loved brand by users, myself included. It's been one of the probably most popular go-to Christmas gifts for the last couple of years on my behalf. And so I myself have been a really big fan of Pascal and the team that they've built with essentially a mission to onboard much broader type of user set into crypto beyond just the kind of crypto natives that we kind of grew up in the early days of this industry.
By the way,
So
before those that send email and hate, do not. If you're a Trezor fan, it's okay. You can get over it. Everyone has used a Ledger before too, not just a Trezor.
And I think it's an excellent forcing function of a debate as to what kind of hardware wallet a user should choose for kind of their needs, and almost like a spectrum of what they are optimizing for. So the reason just I didn't want to dive too much into the technicalities, but certainly wanted to give a context why this recovery model and function is so touchy feely to a lot of the counterparties here. Well, up to date, you really, when you generated your seed phrase, setting up your hardware wallet, you primarily had an option to store that seed phrase on your own, and whether you decide to kind of break it apart, physically store it, there are multitude ways of doing so. Now that has been when you mislocated or where you actually wanted to deny and revoke access. Or actually lost your USB stick in a boating accident, you always had an option to reconstruct that and regain an access to your wallet, to your holdings, if you were meticulous enough of practicing kind of best OPSEC practice and being able to recover that seed phrase. Now, that is not always the case, and I think where the reality really bites eventually, that even some of the sharpest minds in the space oftentimes make a misstep. And so with that in mind, Ledger wanted to expand that offering to a regular retail user that perhaps wants to have a form of recovery that is going to be facilitated by third parties. And those third parties, according to Ledger, will include a set of custodians that will effectively store part of your seed phrase. So there's several custodians in that value chain. And so all of a sudden, it introduces to many of the critics many vectors of potential attack. First, you have to trust Ledger. Two, you have to trust the custodians. And if you're really, truly paranoid, as some on crypto Twitter might be, you actually have to also trust the chip manufacturers that make that USB work. And that is unfortunately a rather narrow-minded view of the space. The reality is such that beyond Bitcoin, that doesn't really evolve too much. All the other blockchains of that kind of next, second, third generation are absolutely evolving when it comes to the type of consensus algorithm that they use. So for Ledger to evolve with the market, it does need to have an option to essentially help and upgrade that firmware. But there are users that absolutely don't want to have this kind of black box of an environment, which is more of a forcing function of all these third-party suppliers that Ledger contracts with. As a result of that, they have to kind of keep that kimono closed. Now, if you want to be able to audit and use more of a open type of designs, there are alternatives in the market. And as always, kind of do your own research. But to me, that was like an incredible, important debate that is still ongoing, that is educating, quite frankly, broader segment of the population, even ones that are truly kind of OGs from early days, about how the hardware wallet actually works. So a really important wake-up call there.
Absolutely true. And I know one of the other things we wanted to get to, and I'm just going to do a little bit of a surprise for anyone who's watching. So we wanted to talk a little bit about the Solana phone that came out recently, and as you can see in the box here from FedEx, thank you, Mr. FedEx, we do have a Solana phone that we will be testing out over the next few weeks. Why don't you tell us a little bit about why we're excited about this? And obviously, thank you to those at Solana that were able to get us this. We look forward to testing it out. We think this is going to be fairly significant in terms of the way that everyday users interact with digital assets and digital asset platforms.
And this is another reason why we decided to kind of pick it as a segment to bring up in kind of hardware news is whether you're a critic or a fan, there is a very real question of whether arrival of Solana Saga phone is essentially kind of that iPhone moment for crypto. And while the critics might have been kind of overblowing a little bit the expectations here, we do think that there is a void in the market, perceivable void in the market today when you're looking at the dominant smartphone manufacturers, really Apple and Samsung being the two leading ones with kind of a long tail of other party providers that have kind of shunned away or haven't necessarily embraced some of the Web3 primitives, crypto primitives, and embedded them in an easy to access, easy to operate way. Now, where kind of Solana comes in, which is super exciting, is that it ultimately is trying to force the hand to outside observers like ourselves to actually make an argument that you could actually have a really elegant case for combining power of smartphone mobile, with a wallet that will start actually unlocking a lot of potential new design spaces for this industry.
I'm going to unbox it while you keep talking, so keep going.
Do it. Yes. I love the unboxing live. So whether it's unlocking your typical kind of usage of iPhone being very much dedicated to pictures, now you will be able to mint some of those pictures NFTs and keep sharing with your friends via chat or kind of other popular messaging factors. You will be able to manage your DeFi positions on the go, essentially topping up your collateral while taking on a DeFi loans, or outright managing a variety of different communities with like a token gated access. So that has been super cool. And finally, we are also coming to the piece of security, being able to protect your own wallet setup and do it with essentially biometrics that you're typically used to with your Apple iPhone. So the reason why we're excited here, not only Anatoly is one of the Solana co-founders, great background from Qualcomm and actually working on designing that chip technology that goes into most of the Android phones out there. But also them teaming up with OSOM, which has been that premier hardware team that worked on a lot of popular Android designs before they decide to team up. So certainly one to follow, and one we'll be probably talking more through the remainder of this year as we get to test.
I'll boil it down to something a lot less technical. We're all kind of creatures of habit, and our habits right now, we use our phones, we go to a store, we double click there, or if you have an Android phone, you do something else on Google Pay, and that's what we do. This is what our lives are. This is what we're used to. We're used to having supercomputers in our hands and having everything there that we need. And so that's why I think that this could be fairly ingenious, and that's this saga. And so we're going to be testing that out. We may actually do a video where we actually test it out in live, and we'll let you see what this looks like and what it can do. We're very excited about that, and obviously we will have more to show with you on that. As we move on to my favorite segment, valuations and capital flows. So as of right now, as we're talking, about $330 million, give or take a little bit more, a little bit less, has been invested in the month of May. And this is a fairly significant drop, notable drop, from where it was this time last year, where we saw about $4.5 billion. It's about a 93% pullback. And so what we've seen is that we've seen about $158 million deployed to half a dozen Series A and B deals, and the other half going to early stage seed and pre-seed deals. The noticeable uptick is an investor interest in AI and crypto crossovers for the early stage deals, and that's coming from Masari. That's something that we are definitely talking about here internally, and something that is very noticeable out there. Some of the deal highlights that we've seen: River Financial, a popular Bitcoin-only financial services company best known for its Bitcoin brokerage, raised $35 million from Kingsway Capital, Peter Thiel, Valor, and others, pointing to a trend we've been seeing of Bitcoin exposure being desirable at the time of macro woes. And as we are recording this, hopefully there is a debt ceiling deal to be had. We don't know, but if there isn't, that will continue on. We also saw Pudgy Penguins, which Michal can elaborate more on, a popular PFP NFT project raising $9 million to commercialize its IP and bring it to the masses, backed by 1KX, Big Brain Holdings, Shima, and others. And so we've seen a few of these deals happen. Again, it is a noticeable trend down. And again, we've talked about this before, but that is part and parcel to what's happened here in the States. Regarding regulation or lack thereof, lack of clarity. Michal, what are you thinking about that?
Certainly is a reflection. We can probably attest still some of that subdued deal flow to some of the remnants that we are still kind of burning through in the banking crisis here in the US, where we know for a fact that there are deals currently being done that will probably take a few more weeks and that kind of lagging indicator to get announced. So by all means, May is very much still a reflection of kind of the banking crisis we've experienced earlier in Q1 of this year. Now, certainly on the topic of regulation, just as you hinted on there, David, probably one of our recurring segments for this session here for a good reason this year and probably beyond. We kind of are not seeing a whole lot of change to the U.S. climate and kind of U.S. regulatory news coming out. Seem to be, I guess, the biggest talk of the town, this SEC Ripple case that's still ongoing. Bit of a tug of rope these days around especially former SEC Director Hinman documentation. Mm-hmm. You know, he made that very known speech back in 2018, essentially hinting at Ethereum being a security. And there's quite a voluminous correspondence in and around the time of the speech when he delivered it that team at Ripple are trying to unearth and make it as a matter of public record, which could potentially sign a change of tide here and potentially will be bringing to some form of conclusion. But other than that, honestly, the kind of not so much to report out of capital as we are headed into the summer here. The other jurisdiction that has been very exciting, especially this month, has been Hong Kong. And that's the one where, at the time when this episode drops, by the time Hong Kong securities regulator, SFC, will start accepting license application for crypto exchanges. The reason why it becomes really particularly important is that up until very recently, there has been noticeable anti-crypto stance, especially not only in mainland China, but Hong Kong as well, had its share of reservations. That is changing, but it's changing in a different form to years prior. And that is, there are actually significant requirements put on these exchanges, not only to audit and diligence the tokens that they're listing, but also look at very important security audits. Something that David and myself have been talking on this show is that the type of institutional offerings and particularly retail protections that will be put in place will be quite different. So maybe this time is different. And that is probably one of the more exciting developments that we've seen on the regulatory front this month.
And I will say here very quickly, we've been monitoring. So Coinbase actually stepped up to the plate here late last month into this month. They filed a narrow action in federal court to compel the SEC to respond yes or no to their July 22nd petition. Again, this is July 2022, actually. Petition asking the SEC to use its formal rulemaking process to provide guidance for the crypto industry. Effectively, the Administrative Procedure Act, the APA, requires the SEC to respond to Coinbase's rulemaking petition with a reasonable time. If the SEC says no to our ruling petition, which it has a right to do, then Coinbase will be allowed to challenge that decision in court and explain in that formal setting why rulemaking is required. Basically, in layman's terms, and again, we're not lawyers, so we're not going to pretend to be, but Coinbase has asked the SEC to basically provide clarity if digital assets are securities or not here in the United States, and they are trying to get that clarity. Again, this is important. We all want this. We want that clarity here in the United States. It is important for us to be able to grow as an industry, and we look forward to watching that continue to go. While we were getting towards the end here, last few minutes, we wanted to talk about hot trends. I know, Michal, you wanted to talk about BRC20s. We also wanted to talk about proof of humanity. I wanted to add one very quick one. We alluded to it, the confluence of AI and digital assets. We continue to look at that. We think there is more to be done there. Again, the dearth of things that are happening in AI require tremendous amounts of storage. And we are starting to see that there are decentralized storage players, the likes of Filecoin Storage, others out there that have been around for a few years that may be making a play to get involved in that. We are also seeing that there is just an immense amount of AI-generated content that's starting to be generated. Just this week, there was an AI fake of the Pentagon having an explosion, which caused the markets to decline quite voraciously. And so this is really interesting. Again, this is something that we think on-chain verification and on-chain minting of content is got a potential to be something very significant. And so that's one of the things we're watching. Now, tell us about BRC20s and Proof of Humanity, Michal.
Sure. So proof of humanity, really, maybe just tying onto some of the trends that you pointed out, David, is really ultimately trying to ascertain the provenance of the content that we get to consume, whether it's created by ChatGPT, DALL-E, Midjourney, or many others that are coming to the market in short order. It is paramount that some of that identity gets ascertained, especially when it comes to potential deepfakes that have, and we have seen that demonstration of a very powerful way to sway and alternate kind of the reality. And to that end, there are some very interesting on-chain solutions that we are hearing coming to the market shortly, and we'll be reporting from the front lines on that in short in short here. The BRC20 I definitely want to finish with because the sense is 2023 Bitcoin is back in vogue, as we've pointed out by some deals in and around Bitcoin, and BRC20 particularly caught our eye as this is the cutely named acronym that is a direct correspondence in relation to ERC20, the popular fungible token standard in the Ethereum world. So paying really homage to evolution and making everyone's favorite pet rock, Bitcoin, actually programmable. So to that end, BRC20s really caught our attention because the fungible standard, as many of you have heard on our first episodes, when David kind of touched on the rise of ordinals and the non-fungible cousin or sister asset that is building on the ordinals protocol. Now BRC20s emerge as these tokens that are rising in popularity to the ire of a lot of Bitcoin maxis that are essentially talking about clocking and clogging the network. We think it demonstrates actually a potential healthy level of innovation that's now coming to Bitcoin shores, and ultimately creates market for fees, which gives not only great incentives to help miners continue to secure the network, but actually will produce quite a significant winnings to those that stick around and continue to innovate on how that network can be secured going forward. So certainly something to watch out, and we encourage everyone to keep up to date and not dismiss Bitcoin, because clearly the OG isn't done yet.
And do not disparage those that may wear wizard costumes at Bitcoin conferences. It's a very, very nasty thing that's happening over there, so don't do that. It's been great spending time with you, Michal, and it's been great spending time with you all, giving you a little glimpse into what's happening in venture here in digital assets. We look forward to having you back next month. Again, if you have any questions, any comments, if you want to send us good stuff to test out, we're going to do it on the show next month. Happy to, obviously, be able to take a look at that. We look forward to it, and we'll see you in a few weeks. Take care.
Bye all.